eyes are better than one set? And I would agree with you. That's what Trish just asked me as I walked out the door, and she said, well, who's we? When you say we knew about it and we got short across the board, who's we? I have a network of friends that I talk to on a daily basis. I wear a headset with a crystal mic, okay, and my computer dials my telephone for me. Because, you know, today I ran out there and I go, Bruce, what do you see? And he goes, I got one. And he's watching technical analysis that I don't watch. We good? So back to this kind of stuff. Do you need to have all this stuff and new services? Maybe, maybe not. Let it develop. As you find a need, you will. But if you need to network, two heads are better than one. There's just no doubt about it. So you guys have a very good opportunity. In this class, by the way, I've had 2 corporations form and 1 marriage. Okay? As you guys talk to each other on breaks, if you like what the other guy says, if he kind of thinks the way you do, swap your emails, give them your phone number, make friends with these people, and stay in contact. Trading is a lonely game. You're sitting in a little room watching a square, glowing screen, okay, and you're concentrating. Every now and then it's nice to reach out and touch somebody, you know. Hi, how you doing? I'm doing okay. What are you watching? I got Stokes going up here. You see that oversold condition? No, I didn't see that. Let me switch. What are you on, a 5-minute? Yeah, I got it? Oh, cool. That's really great. You start to see things, okay? Not hallucinate. Okay, but you start to see other things. Let's put it that way. Questions so far?
It sounds like if you are really if you're gonna do this to make a living, you are truly gonna live it.
Well, there is just no doubt, people, that anything that you do, the more you put into it, the more you get out of it.
Right.
I mean, Tiger Woods isn't the world's greatest golfer because he doesn't hit golf balls. I mean, he lives, eats, and drinks golf balls. That's what he knows. That he can look at grass and tell you whether it's bent Bermuda or whether it's Kentucky bluegrass or whatever they use, okay, just at a glance. He knows everything about his business.
Right.
You know everything about your trucking business.
The grain of the grass.
Sure. He knows all that stuff. That's why he's the best. Now, what about the guy who's number 200 on the PGA Tour? He's not the best. He doesn't know what kind of grass it is. He just knows that he can make himself a couple $100,000 a year playing a game that he loves. Okay? So you get out of it what you put into it. And again, you do not need all of this stuff to start. But I want you guys, again, to think, where are you going to be in a year or 2 years? Okay? You might want some of these other tools. We've already kind of talked about this, but we'll hit the slide anyway. No matter what your distance or location, be sure your tech wizard can take over your PC and do the necessary work on the internet. Very rarely will you ever have to bring it in and have it repaired or modified or anything like that. Make friends with this guy. He's just as important as your broker. This is like being in a race. Do you need a good mechanic? You bet, okay? And he's the mechanic that keeps his platform working, keeps his stuff going. So you need to be friendly with him. Again, find out what his birthday is, mail him a nice funny card, send him a box of chocolates or whatever floats his boat, okay? Okay, you guys dying?
No mention of backup on data?
No, I didn't mention that on data, but we certainly can. Let me push this back one slide.
Do you have much data stored on your machine?
No, I have very little data, but however, I do have backup connections, okay? First off, all your trading information, as far as transactions and monies and all that, are stored at your broker or your clearinghouse. And those can all be accessed from the internet anywhere in the world, alrighty? So you don't need to download and say, what trades did I make today? They're all there somewhere if you need them, okay? At the end of the year, you can either get them electronically or you can ask your broker-dealer to send you a hard copy of a summary of what you've done for tax purposes. As far as your intraday work, you're knowing what your support and resistance numbers are, what are key price levels in your stock, stuff like that, you need to write that down. And of course, if you're going to put it on your computer, you're going to write it electronically, you know, you should back it up. What I do is I burn things to, I have a CD burner, and I just burn like 3 months is about 600 megabytes of information, okay? And so that's about 1 CD every 3 months, so 4 CDs a year isn't bad. I used to have banker's boxes full of stuff, you know? And so I've been able to squeeze it down. Backup connections. Excuse me. I have a cheap Cisco router in my house. I'm on DSL, but I have the router automatically switches over to a 56K dial-up, okay? So if there is some reason I did have a drop down in DSL, the router would detect it, and within just a couple of seconds I would have data flowing. Not as fast, but certainly enough to allow me to get out of a trade. And as Carl mentioned, we should all have a separate battery backup system. Again, if somebody hit a power pole outside the house or something like that, that would give us 15, 20 seconds or 20 minutes to clean up business and be clear before the computer goes down. On the other hand, if the guy hit the telephone pole out front of your house, you probably lost DSL or, you know, cable modem anyway, but you're on a cell phone. But well, we can only deal with what we can deal with in front. So yeah, it's a good point that Carl brought up. We should have some sort of a backup system, not only for our intraday data, but for our financial matters, and we should have a backup for connections. I want to start to wrap up here for the end of this 3-day section with talking to you guys a little bit about preparing for live trading. First off, there's a very, very big difference. On the breaks and stuff, we've all talked a little bit about demo trading and paper trading and stuff like that. There's a huge difference, people, between trading with real money and pretend money. You are a Dr. Jekyll nice guy and an incredible Mr. Hyde monster when it comes to making decisions with money. Therefore, demo trading is good for only one thing, and that is teaching you the platform. And you can download these demo platforms from any of our affiliates, any of the broker-dealers, or any of the other ones. Cyber Trader, Realtick, or any of the 5 or 6 that we have, okay? So, these are great if you want to look at the platform, see what its capabilities are, learn how to set the share size, how to draw lines and all that. That's what demo trading is good for. But people, do not ever believe that what you do on a demo platform is going to be analogous to real trading. Okay? First off, the demo platform always fills you. If I go out on most demo platforms, I can go Microsoft, $1, I'll get filled. Sell it for $50, I get filled. I just made $49 per share on Microsoft, not bad. Okay, do that for 1,000. I had a student come up to me and he said, well, Mike, I want you to know, I was making it as tough on myself as I could. I was only buying at the ask, and I was only selling to the bid. You know, I could have made a little bit more money by buying it on the bid. Yeah, I know. Come on, I'm an instructor, I know that. He said, but I really was making it tough on myself. And I wouldn't even count it if I couldn't see the number in the prints. Oh, okay, that's really good. What's your question? He said, well, I made $5,000 yesterday. Could I say that that's real? No. Well, could I say 50% of it's real? No. Could I say 10% of it's real? I said, no, it's not real. Stop trying to fool yourself, okay? Don't ever let yourself think. Why do you think we go to the trouble of making you guys trade live in here? Because it is different. Even if it's my money, not yours, it's still different than no money. You make and think differently under pressure.
I have a question about that.
Sure.
How come when we traded live, none of us know what we're doing?
Uh-huh.
And none of us showed any green. We flipped the coin how many times?
Mm-hmm.
What are we looking at backwards? Because we're all looking at it backwards.
Well, we just need a little bit more training to start getting that. First off, the exercise I gave you was an automatic failure exercise. Okay, the chances of you making a nickel and just happen to be in the right direction. But again, I hate to make the bad joke, you got investment blood running in your veins. You still look at things and you think you know what you're seeing, but you haven't made the mental adjustment. You buy when you see price going up. You sell when you see price going down. I buy when I see price going down. I sell when I see price going up. Okay? And you're still going, that still doesn't sound right. I know. It's going to take a while for it to sink in and to do this often enough. You're going to see an awful lot of red screens, and when you start seeing green screens, you're going to go, I see what he means by buying when it goes down. Now, one of the things that you really need to do, people, is start practicing mentally your exits and your entries. I'm going to tell you just a quick little psychological story here. And you may have read about this one because it's a pretty famous experiment. But God, this was like the late 70s. A group of behavioralists, psychological behavioralists, took a bunch of people and they brought them into a gymnasium and they got everybody to shoot free throws. You know, what Shaquille O'Neal can't do, you know? And they noted down all the shots, how many were missed, how many hit rims, how many missed entirely, and all this. And then they divided them into 3 groups. In the first group, they said, we want you to go away for 2 weeks. And we don't even want you to handle a basketball. We don't even want you to think about round. Okay? Just go back to your lives. The second group, they said, we want you to show up here every day for an hour for the next 2 weeks and stand here and shoot free throws. The third group, they said, we want you to come and sit in a chair here on the gymnasium floor and imagine shooting free throws for an hour each day for the next 2 weeks. Well, when they brought the people all back together, as you well can imagine, the first group did not improve. Okay? The second group improved 68%. By just practicing and shooting free throws, they improved their shot percentage to 68% up. Surprisingly, the third group improved 67%. They didn't shoot a basket. They just sat there and visually, mentally tried to imagine themselves shooting it. Where does shooting a basketball come from? Does it come from the arms and the fingertips, or is it guided by our mind and the data we take in? Sure. So most of reality, people, is between your ears. It's how it's perceived. And if you think about things and you sit there and go, okay, I'm going to buy on the bid, and I know I'm going to get filled because the red prints are going to run out right here. Okay? That's where the selling is going to start to dry up, and I'm going to be a buyer at that moment. Okay? And I'm going to imagine I'm going to do this. I'm going to use DART, and I know DART only buys at the inside ask, so I'm going to put it a penny below so it'll automatically post me. And this will give me my best shot of anybody, the public, an ECN, a market maker, anybody sniffing around the bid, I'm going to get my fill. And I'm going to get out here, and here's how I'm going to do it. I want you to think thoughts like that. My God, I have a 10-cent stop loss, and it skipped over my 10 cents. How am I going to get out? Am I going to use Dart Market? Am I going to do a limit order out to the bid? What am I going to do? How am I going to do it? Think it through. Think through scenarios. Whenever you're standing around playing demo, whenever you have idle time on your hands, think about how you're going to research something. What am I going to look at? Tonight, I have an hour of chart study. I'm going to go out and look for a pattern. I'm going to go out and look for some trends that have been recurring. Because if you think about them, you'll find them. Okay? If you never give it a second thought, well then every time you look at a chart, it'll be a stranger to you. Start trying to imagine where you are. You need to practice on demo, and you need to practice continuously. You guys asked me some poignant questions. Does this platform have a audio tape or a videotape to go along? Does this one have a manual? Some do, some don't. Okay? All of them, all the different brokerages will be delighted to give you a customer service person who will walk you through it. But what do you really need to do? You need to click on everything. You need to click on it and set it up. What if you're left-handed or left-eye dominant? Where do you need things? What makes comfort? What makes speed and efficiency? These are all different things. Again, practice beginning scenarios. How are you going to make money? What are you going to do if you lose it? How are you going to lose it gracefully? How are you going to learn to let go? One of the worst things is that people get angry when they lose money. Anger doesn't help. Neither does joy. I'm not saying you can't be happy in your work, but you can't be giddy about it either, okay? What are you going to do in an emergency procedure? Who are you going to talk to? How are you going to talk to them? How are you going to get them? What speed dial number are they? You got to think about these things constantly if you're going to start preparing yourself to trade live. Because when you trade live, whether it's with 100 shares or 1,000 shares, people, your money is at risk. Okay, I told you about the guy who left a 10 share lot on Cisco, ended up costing 17 bucks, 10 shares. That's a $1.70 move in the stock. What if you left 100 shares laying around? What if you left 500 shares laying around? Boy, that could get real expensive. Already? So you need to have a routine and a checklist. What do I do to close out? Check for any open orders, check my account status, check my position status, check pending order status. Make sure the board is clear that it's exactly where I think it is before I log off. Ready? You got to go through these scenarios. What would you do if you woke up in the middle of the night and you looked down and saw it? There's nothing you can do. Go back to sleep. You won't, but you'll worry about it all night long. Here's a little bit of wisdom from Tudor Jones, who's one of the great traders, currencies and stuff like that. He's done from some pretty good bucks. As you can see, he did greater than 60 million in 96. He said, risk control is the most important concept to understand and apply. Don't risk significant amounts of money in front of any key government reports. That's gambling. Most importantly, play great defense, not great offense. Ready? He also said, your biggest drawdowns occur after a great period of success. I'm about to give you the top 10 trading rules, okay? One of mine happens to be that if I'm up for one trading month, I take a week off, okay? Why? I get full of myself. I think I can do anything. I get sloppy, okay? To be successful, you must be a little bit frightened, okay? You shouldn't be scared of the market, but you should have a deep, abiding respect that it can jump up and bite you anytime. I'm a diving instructor. I spent 40 plus years in the water, okay? I am not frightened or scared of sharks, but neither do I pet them on the working end, okay? I know that any large animal with large teeth can do me damage, and I give them the respect that they're due. I don't stick my hand into moving garbage disposals either, okay? The best money is made in market turns. That's at extremes, when we hit a bottom or when we hit a top. And boy, is that true, people. I enjoyed the heck out of 2000. Ready? People associated with Wall Street don't know anything more than anybody else, perhaps less. This is what Paul Tudor Jones said. Prices move first, and then fundamentals come second. People on Wall Street will tell you just the opposite, okay? But what makes good earnings is good earnings, okay? This then brings us to the last lecture for today, the 10 laws of trading, rules to live by. People, your job is very, very simple with this lecture. I want you guys to go home and start your trading plan. I want you to sit down and open up that Word document and remember, write your goal. Hi, my name is Cy. I intend to be a swing trader. I'm going to study charts 4 nights a week for an hour and a half between 7 and 8:30, Monday through Thursday. Every Saturday morning, I'm going to read a trading book between 8 a.m. and 10 a.m. Between 6 a.m. California time and 8:30, I'm going to practice demo for 2 weeks until I know my platform. You write this stuff down. As you write these goals down, you can start, or these ideas, you can start finding ways to accomplish them. The next step, while you have this open, skip down a page and write my risk management rules. And what I want you to do is to copy these 10 that I give you, but I want you to rewrite them in your own words. I want you to hear what I have to say and then I want you to write them down as you think you understand them. Now, this is your starters list, kids. You're going to add as much you want to it, okay? As you think of a situation, add a rule to control it. I already told you, like, my rule isn't so much that I just stop trading it at 30. I have to log off and get away from the platform because I'm a little bit compulsive. I know that about me. So I try not to allow myself to do it. I just gave you another one of my rules. If I'm up for 20 days in a row, I need to take a break because I get sloppy. I start throwing around a little too much extra. I take a little bit more chance than I should because I think I can walk on water. Boom, and the market slaps me right back down when I don't. Okay, so I might as well just take a break and save the money. You know, that's how I look at it. So I'm going to give you these 10 laws. Again, I want you to think about them, and I want you to write them down when you start your business plan. Okay, but rewrite them into your own words and think about what they mean to you. Rule 1, people, start with small share size. When I say that, I mean, I think you guys should start with 100 shares and trade 100 shares for the first month or two. Okay? You're going to want to trade more. You're going to look at your mounting costs in commissions and stuff like that. But again, you need to start getting used to this without taking exceptional risk. If with 100 shares, even if you get yourself caught like the deer in the headlights, okay, and the thing goes down a whole $1, you're only going to lose $100 plus commissions. But on the other hand, you start throwing around 4 or 5 or 1,000 shares, okay, 1 or 2 bad mistakes can get real expensive real fast, okay? So the next thing is don't count on beginner's luck. I actually hope you guys don't do well for the first month. I know that sounds grim, but if you hit all your trades right off the bat, you're going to think it's easy and you're going to let your guard down, okay? And then they'll get you, okay? Just when you put your guard down, that's when they sneak up and grab you, okay? Don't take any larger risks until you start to build up a buffer. In other words, until you start seeing that you can consistently make money, keep your share size small. If we start at 100 shares for the first month or two, do we jump on the third month to 1,000? No, we scale up. 100 to 200, 200 to 300, 300 to 400, 400 to 500. You will find that as you increase your share size, you'll find a level that makes you very, very nervous. Back down 100 or 200 shares. I got up to 8, Mike, and I was just losing too much money. I was starting to become as nervous as a cat in a rocking chair factory. So back down to 500 and trade until you're comfortable there again, huh? Then move up. And you do this incrementally, people. I wish it was simply 2 steps forward and 1 step back. It's not going to be that smooth. But it is going to be incremental. You're going to have to inch up on it a bit. Don't make a deal with the devil. Here's where you can break down so quickly and so fast it's not funny. You know, you're sitting there and you're playing Cisco and the thing is moving 50 cents a day and you're getting 12 cents out of it. You're hardly covering costs. And you look over there and you see it out of the corner of your eye. There's Xilinx up 4.5 points in the last 5 minutes. So you go, the heck with Mike. You put Xilinx in the thing and you're watching it. And you know what? I'll just put 100 shares on it. Bing. Boom. It shoots up and you make yourself 3 points. You get so nervous, you blow it out, and it goes up another 2 beyond the 3 you made. But you just made $300 in about 12 seconds. So what do? End of the day, you come into your significant other. Honey, psst, ha! You've got the trader of the century. Can you believe it? I made $300 in 12 seconds. I knew it. Mike was keeping the good stocks to himself. He wanted to make all the money. He didn't want to share. I found it out. You know what? If I could make $300 in every 12 seconds, let's see, that's $1,500 an hour. You know, what is that annualized, hon? Do you really want that new Escalade? Might as well put a down payment on it right now. Okay, that's where we're going. And then in bed at night, she's still trying to go to sleep. And did I tell you what a good trader I am? You know, and then you start thinking, what? man, you know, if I had stayed in for the full 5 points, I wouldn't have made 300, I'd have made 500. Oh, that rat Mike. He's the one that told me to do 100 shares. I should have had 1,000 shares on it. Then I would have made what? $5,000. 5,000 every 12 seconds. What is that annualized? Okay. Well, by morning, you know what's going to happen, don't you? You're going to go out there, you're going to throw 1,000 shares on Xilinx long, and the thing will go down 3 points or 5 points. What'd you make? $300, and suddenly you lose 3,000. You're net down 2,700. 1/10 of your entire account is gone, you know, because you didn't get a good night's sleep. Okay? Don't make a deal with the devil, people. Be careful. Those little alluring words, come on, babe. Come on, we can make some money. We're doing this okay with 100. Let's jump to 1,000. They're waiting for you out there. They're right behind the bush by your front door. Okay? Number 2, when in doubt, get out. Hey, if you actually did a trade, you actually set up a plan, you had 4 or 5 good solid reasons to take and open this trade, and it suddenly doesn't perform, why'd you do all the work? Something's wrong. Stop. Oftentimes, you are absolutely right in your analysis, but you jump the gun. You don't wait. You're not patient for it to really happen. So you think this thing's going up, and you buy it, and it goes down. Well, you don't know it's going to come back up. The sooner you get out, the less money you're going to lose. When you get out, you wait and see if it does come up. If it comes up, buy it again. It's only worth a commission. But I don't want to pick on Al, but you know, he was trying to get over with a fast one today. He blew his stop and he thought, well, if I wait long enough, nobody will know. It'll come back up and it'll look like I got out at a nickel, okay? But what happened? It just kept going down and going down, okay? Yeah, you know, so, and this is what happens to you. Hope and greed, okay, and fear, these things work on your minds.
You caught me because you told me we had to stop.
Exactly.
He'd have been broke if you hadn't.
No, what would have happened is the market closed and it'll gap down tomorrow and it'll only get worse, okay? People, if it doesn't behave like you expect it, get out. The sooner you get out, the sooner you start saving money. Waiting costs you money. You're always welcome to get back in, but don't hang out. When in doubt, get out. Learn the difference between gambling and trading. Step 1, as a novice trader, you should not be taking things home overnight. It's just that simple. At least for the first 6 months, you want to be a day trader. I'm done flat at the end of the day. Whether you make 10 trades or 1 trade, I don't care. Alrighty? But you should be flat at the end of the day. You can't control what happens overnight. Don't trade a stock just because it's irrationally high or low. As somebody pointed out, irrationality can outlast most people's accounts. Okay? I had one of my students about 1.5 years, 2 years ago call me up. He said, well, Mike, do you think it's time to buy Enron? It's down to 17 cents. I said, get off my phone. There's a reason that a $50 stock is trading at 17 cents, people. It's broke. It's gone, okay? It's history. We had a guy on the floor, and you guys can grab Ayal for this one. He walked in. He was a 15-year Merrill Lynch stockbroker. He walked into Momentum Securities. He slapped down $270,000 cash. Said, open an account. I'm going to show you guys how to do this. This is 1999 when Amazon was trading upwards into the $100 range for the first big run, okay? And he watched it go from 65 up to around 75, 80 bucks in one day. $15, $20 move, ready? And he said, this can't last. So he put a couple thousand short on it. And then, of course, he added to his shorts when it went up to 95. and he added to his shorts when it went up to $115. And at $115 with a 2 times 2 times 2, okay, the risk manager, Sherry, walked over to this guy and said, "Sir, if you don't cover some of this, you're going to have to liquidate your account." Believe it or not, $270,000 is almost gone. He said, "What? You guys don't know what you're talking about." She said, "Sir, believe me, we wouldn't be here. We want you to trade. We want to make money off of you, but we don't care. We're not going to take the risk. We'll liquidate you." He said, "Oh yeah?" He logged off of his platform and he walked out. The next day, Amazon gapped up to $165 and they liquidated him. He lasted a day and a half, $270,000 gone like that. I worked for a year. I worked hard for a year to make that kind of money, and he wasted it in a day. Okay, what, on arrogance and a belief system that just didn't hold up? It can't go any higher. You don't know that. Of course it can go higher. Okay, it can go anywhere anybody wants it to. You've all heard Alan Greenspan say irrational exuberance. We saw the mania in '99 and 2000. People, it'll come again, it'll leave again. I've been through this cycle 7 times. This isn't new to me. This is the same thing that happened before, that happened before, that happened before, times 7, okay? Do not hold open positions before the market opens. This morning I gave you guys a handout. You guys asked me about extended hours. Take a look at this handout. You will see a price being controlled by 100 shares of a major large cap company. Okay, it jumps around like a June bug on a hot frying pan. Alrighty? Don't do that. Now, I have no problem, guys, using extended hours to escape. You took your very first overnight home, okay, and the company closest to yours misses earnings horribly. Go to the extended hours and sell and take your loss right now. It's not going to be better when Joe gets home and has a couple of beers and sees it on TV. Okay, the next morning it's going to be horrible. So you might as well take your little loss right now. So use extended hours to escape, but not to open in. Okay? No positions before major market announcements. Now, I mean, no positions just before. Don't be opening them. If you already have a position open and you know that Alan Greenspan is going to give the word at 2:15 East Coast time, you need to sidle on over to your computer around 2 o'clock. Okay? You need to have a stop loss in or your hands on the keyboard because you don't know what's going to happen. You don't know how they're going to react. Certainly don't try to bet. Oh, well, Alan's going to smile this time. I'm going to go long right now before he makes the announcement. Yeah, right. And again, you're going to get hammered. Something about a 20-pound sledge between the eyes. You ready? We also showed you coral snakes. Every one of you people in here would love to have a 10-point winner. How many can afford a 10-point loser? If they can volatilely go up, they can volatilely go down. Okay? They will shake you to the very shiver-me timbers. All ready? Leave those coral snakes alone. But Mike, other people trade them. Okay, I'll make you a deal. Do it my way for 6 months, and then go out and find the rips, roars, tootinest stock you can find, the worst coral snake of all times. Put 10 shares on it. Don't worry about the commission. Put 10 shares on it and see if you can manage it. See if you can get out where you want to, or if you can reach a goal that you think you're going to get. Try it with just 10 shares. Who knows? You may be, you know, the Tiger Woods of coral snakes. And also it may cost you a real nice dinner on 10 shares, okay? Find out fast. Number 4, don't ever add to losing. Cost averaging is put out by the mutual funds at the end of the 1940s. It was promulgated by the broker-dealers through the 50s and 60s. You'll laugh at this. Hey, if you liked Academy at 40, you gotta love it at 30. Okay, buy some more. Listen, after all, you'll lower your break even. Wait a minute. Are we here to get even, or are we here to make a profit? Be careful of how you think. If I bought the thing for $19 and it drops to 17, and I say, well, I'll buy some more so I can get out of this at 18, why didn't you get out of it at 18? Why are you saying that now? Okay, if you want out, get out. Don't try to sweeten the poison. Okay, cyanide, I understand, doesn't taste very good. Putting sugar in it doesn't help you. You're still just as dead, righty? So, thank you. People, if anything, you average up. And I always try to add to winning positions. I see the thing starting to move in my favor, throw another couple hundred shares on it. Continues to move, throw another couple hundred shares on it. Starts to go against me, blow it all out. If I have time, I might scale out. Like I say, I think one of the best little tactics you guys can adopt is taking 50% off. As soon as you say, okay, I had 20 cents worth of risk in this, okay? You get up 20 cents, take 50% off. You covered your risk. Now the rest is gravy. You can afford a couple more commissions. You can afford another position. Yes, sir.
If you buy 100 shares of ABC stock and then you like what it's doing, so you buy 100 more, you buy 100 more. You own 300 now. You've got three
commissions in. Uh-huh.
You sell 300.
One commission out.
You can do that.
Sure.
You don't have to sell it the way you bought it.
Nope.
Okay.
And you can use any route. You can use Island to get in. You can use SOs to get out. It doesn't matter. Okay. So yeah, I have no problem with paying a couple commissions to add to my profitability because I know I'm only going to have one commission when I get out, or maybe two if I scale out. Okay. So people, do not cost average, huh? Number 5, don't overtrade. Trading is fun and it is easy, people. I think I already told you the story. The first time I got onto a direct access trading platform with Momentum Securities, the very first month, I managed to lose $17,000. I lost $16,400 in commissions. Okay, I lost $600 to the market in 1 month. Ready? But I lost 17 grand net. How? Traded too much. It was fun. It was easy. Now, you guys came in here and you said, well, Mike, I want to be a swing trader. I only want to make 1 or 2 trades per month, per week. I can't afford to make more than 1 or 2 trades per month, right? Some of you guys have said that to me. Look at your screens. How many trades did you make in an hour today? 10, 12?
Not Al. He was sitting on it.
Yeah. No, he had that many too. Yeah, he had patience. He only had 16 tickets. He had 8 trades. Okay, some of you had 20. What can I tell you? What can I tell you? That's in a half an hour, guys. Figure out when you have 6.5 hours, nothing to do but push buttons. It's a little too easy, and you got to be careful about this one, people. You trade only more as you get experience and you're on a win streak. You never trade more to make up for anything. Now, here's what I want you guys that are going to trade live before you finish. I want you to make no more than 2 trades a day. One between 9:40 or 9:50 in the morning and 11:30 East Coast time, and a second one maximally between 2:15 and 3:30 East Coast time. I don't care how long the trade lasts or whatever. I don't want you to make more than 2 trades a day. And some of you guys won't be able to afford it because you don't have enough for pattern day trade buying power. Okay, but that's the maximum I want you to make. I don't want you don't go in there and say, Mike told me I had to make 2 trades a day. No, make no more than 2 trades. Why? Well, this will give you time to actually think about what you're going to do, write down what you're going to do, write down what you did, write down an analysis of what you thought happened. I entered this trade because of this, and that. And then I got out of the trade and it actually came out as a winner, but I noticed that this, and that were starting to erode, and that's why I got out. It was a good trade. It was a bad trade. Everything went according to plan except I blew my stop. That's a bad trade. Okay. Yes, people, losing trades can be good trades if you do them according to plan. I got out right at my stop loss. Good trade. I should feel good about that. I followed my plan. I lived my discipline. That's another one. Trade to trade well, people. Don't think about the money. Number 6, people, you must use stop losses. As I said, the 3 primary ingredients to any trade plan. What is your entry? What is your goal? And what is it going to cost me if I'm wrong? Where do I get out? Draw that line and honor that line. The only thing that between you and financial ruin is the zealous use of stop losses. Whether they're mental or mechanical, whether they're initial or break even or time or trailing, I don't care what kind of a stop loss you use, but use one and obey it. If you obey it, you stand a chance to figure this game out before you're just wasting it away. Numero 7, have also a daily limit of loss. And we're looking at maybe 1, maybe 2% of your risk capital. Well, guys, just as a number, if we had $25,000, 1% of that is $250 a day. Okay? How many times does 250 go into 25,000? 100 times. How many trading days are there in a trading month? 20. How long will you last at $250 a day? 5 months. How I keep saying you need to get to 6? Okay. Now, I admit this is worst case scenario. Are you going to lose $250 every day? No. But what happens if one day you make a mistake and you lose 1,000? What did you really lose? 4 days. Okay? 4 days of experience, 4 days of opportunity, 4 days of seeing it. You've lost that in one trade. You got to be careful, people. I think also that for the first 6 months that you should have a daily win stop. Set yourself a goal. If I'm up $300, stop trading. If I'm up $500, stop trading. Set a goal. Something that's easy to achieve. Why? You people need confidence. You need to build yourself up so you start trusting you. Not me, trusting you. Okay? The first time you have a real good day, you make yourself $300 or $400 or $500, stop trading, take yourself and your significant out for dinner. Go out and have a good time, pat yourself on the back, brag a little bit. You need it. You deserve it. This is hard work. Now, don't blow the whole $500, okay? I said a nice dinner. Don't get carried away, all righty? Have yourself a daily stop loss and a daily reward. Number 8, okay? Be logical, not emotional. Don't get angry. Dell took my money away from me, so I'm going to get even with Dell. I see a lot of people do that. By the way, I'm 100% Irish, and I have a very, very flaring temper, okay? One of my risk management rules is that if I take a big loss in a stock, I will not trade that stock for 6 months. Because as good as I think I am, there may be something in my subconscious trying to get even with it. And I'll give you even a bigger hint. I will never trade Microsoft again. You think there might have been some bad news in that? Yeah. Okay, because I'm still angry. Alrighty, so people, like I say, be logical, not emotional. This cuts both ways. We had one guy on the floor. He was out of class for about 2 weeks, and he had a couple hundred shares on, and he was up 15 grand. He was sitting in one of these black chairs with his arms crossed, and he was rocking like this, staring at the screen. And Sherry walked over, like I say, she was our risk manager, and she walked over, I can't remember the guy's name, she said, Herb, and Herb said, she said, Herb, you're up 15 grand. Don't you think you ought to take a little of that profit? And Herb said, so she left, okay, and about 15, 20 minutes later, the thing was starting to erode badly. She walked over and she said, Herb, and Herb went, and finally, she shouldn't have done it, but she actually put her hands on him and shook him, just grabbed him and gave him, Herb, and he went, what? And she said, you've got a really nice winner, take it. And he went, oh yeah. And he walked home a hero with $11,000. He left 4 on the table because he was out in La La Land. He was buying rock spas. He was getting that brand new camper shell put on, you know. He was having his legs waxed for the first time. I don't know where he was, okay? But he was out there. He was out there. It's not always fear. It's not always anger. It can be euphoria. You can get in yourself and go, wow, I can't believe I'm doing this. Oh, I am pretty, you know. Be logical, not emotional. People, I'm going to tell you something very, very harsh. When I was at UCLA, I had the good fortune to run track under a gentleman, a coach, Jim Bush. And he put out some fairly good athletes over the years. I was lucky enough to be under his tutelage. And he said to us, and of course, when you're in track, everything is me. He said to me, he said to the team, he said, remember, there are no, oh man, I screwed it up. I have to get this right because this is important. If it does not add, it must subtract. There are no neutrals. If it doesn't promote you, if it doesn't help your plan, if it doesn't push you forward, then it's a negative. It's taking you away. There's no such thing as a neutral. Watching television, a mindless sitcom, when you could be running trading scenarios in your head, that's a distraction. That's a negative. Alrighty? Now that's a very harsh way of looking at it. Everything I do has to be goal-oriented. But think about that a little bit. If you could adopt a piece of that, if it does not add, it must subtract. Attitude. Would you be a better human being? Would you be a better trader? Yeah. Okay. So think about these things, how you can improve yourself. And over the last couple of years, I've actually tried to reduce my share size and make the same amount of money. And as somebody said just a few minutes ago, learn to trade for skill. Learn to trade for satisfaction, not for the money. The money will be there if you do it right. But if you try to be the best trader you can be, if you try to be the best human being you can be, you'll do well in this life. Number 9. That's true, absolutely. Number 9, don't trade if there are computer problems or slow quotes from the markets, okay? We saw that little thing from Chicago Mercantile Exchange pop up today. What then if they say DART is in trouble? Okay, if that's my lifeline to the market, what do you mean it's in trouble? Give it mouth to mouth, quick, you know? Stop trading, people. And if you're smart, you'll probably even go so far as to close positions if you're able to. This also goes with you. Let's talk about that for a second. What if you just wrinkled your brand new Mercedes you bought with your trading dollars? Are you thinking about trading, or are you thinking about getting 3 estimates for your insurance company? You had a fight with your significant other and you're still going, well, I would have said, she said, I could have said he was a son of a, you should have been a. Okay, and if you're going through that kind of emotional dialogue in your head, you have no business being in here. What if you have had a head cold and you've been drinking that sneezing, coughing, wheezing, knock you to your knees medicine? Okay, I don't know if you've ever had any of that NyQuil or anything, but you take a swallow of that and you know, yeah, you sleep well, you know, you get the rest you need, okay? But the next morning, your tongue is green and you can't make trades, trust me, all righty? So if you're not feeling well, if you've had an emotional upsetment or something like that, some of the best money you're going to make is by not trading at all and knowing when to and when not to. All righty? Next one, number 10, be disciplined, people. Now this is a tough one. You see what it says there on the bottom. Hearing is one thing, doing is something else, okay? Y'all nod your heads in here when I say do this or don't do that, and you go, okay, Mike, I understand. Now, do it. Stop nodding your heads and start writing your business plans. Stop nodding your heads and start getting up at the same time every morning. Stop nodding your heads and start studying at the prescribed schedule that you set. That is discipline, people. And until you know you can count on yourself, you will not have confidence. Confidence comes from discipline. From confidence comes decision-making power. From good, fast decisions comes profits. You start with the discipline, it builds the confidence builds the decision-making makes the money. You can't make the money without starting with the discipline. There was an old line, it's kind of a long one, but I'll do it one time for you. For the want of a nail, the shoe was lost. For the want of a shoe, the horse was lost. For the want of a horse, the rider was lost. For want of a rider, the message was lost. For want of a message, the battle was lost. And for want of a battle, the kingdom was gone. It all started with losing a horseshoe nail. Okay? You got to pay attention to detail. You've got to have discipline in your life to go up the ladder. On the trading floor, we used to have a guy, an old S&P futures trader, who came in a couple times a week. He just wanted to kind of see what the kids were doing with the electronics. This guy was incredible. He was an old Korean man. He had to be about 82 years older than God, already, and he just dripped. I mean, he wore botany silks. The guy had finger toys. He had the chains. He drove a great big Brougham Cadillac. Little guys in big barge, you know. A little compensation there or whatever. But the guy was wealthy, okay? And he used to walk in, and he really made great friends with our Mitch Carriaga. Mitch makes friends with everybody, okay? Nice guy. But we all hounded him. We kept saying, well, you know, what was the trick? How did you do that in the S&P contracts? Man, you were swinging some big stuff there. Okay, you got to remember, the S&P contracts were running somewhere around $500,000 for one contract in the late 90s, okay? $500,000 is kind of hard to come up with, particularly if you want to trade 10 or 20 of them, okay? So everybody was always bugging this guy. He said, oh, no, there's no secret, just work hard, you know? And finally, Mitch said, please tell me. So we now use his saying as the final to this whole thing. And the saying is very, very simple, people. The old Korean trading principle, don't lose money. And if you do lose money, lose very, very little money. That's what he said to Mitch, okay? And OTA still uses that to this day because it's incredibly important, people. Whatever you do, look out for danger. Remember what Paul Tudor Jones said. Be defensive, not offensive. Always protect your capital. Always look to preserve it. If you do that, enhancing it is easy because you'll always have something to work with. I think I said it to one of you guys at lunchtime. Money is our tool. If we lose our money, no matter how smart we are, we're out of the game. Imagine a guy who's a roofing shingler. This guy can throw a nail up into the air and pound it one shot into the thing. One stroke per nail. Boom, boom, boom. He's like a machine. Take the hammer away from him and see how good of a roofer he is. What's he going to do? Pound the nails in with his forehead? Okay? He's done. He's out of the game if he loses his tools. Protect your tools at all costs. Alrighty. And that concludes the 3-day portion of the 7-day class of the Professional Trader series. Yes, you made it. Congratulations. You have now completed the Professional Trader Plus course. To continue, please insert Disc 1 of the Professional Trader Advanced program.